All right. Welcome everybody to the May 6th installment of I don't know, Wednesday's webinar. I don't really know what else to say. All right, let's just get rolling on this real quick here. So um, I wanted to cover just a couple of things with the indexes because they've been real. I don't like the word froth. I think it's just doesn't really capture the mood. Outrageous, I feel like is a good way to put it. So, if you look at the larger sort of thing here, just to kind of give you guys context before I dive into this. At the daily level, since we've had this low here back at the end of March, we have climbed an astounding 16, almost 17%. That's enormous. And if you let's see, you have 26 bars, 36 days. Like, I mean, when you hear historic rally, I mean, sometimes people got it right when they say historic rally, but this is really a truly historic rally. Same thing with right after the tariff debacle here. We had a very very fast sell off and very quick bounce from that as well. So I say it a lot, but it's kind of very telling of like just general market behavior, like where we're at in the market cycle. Wanted to just take a quick step here or a quick step back. So we have these. I put this on a logarithmic chart, and you've got like the COVID, the COVID drop here, and this kind of puts it in context. Then you had the monster rally after that, and then you had that about 9 months there worth of just like profit taking and general decline. A lot of volume changing hands with that. But then after that, we had a slow kind of grind up, and we had a bit of a drop down here, but it still kind of looks like we're getting pretty close here to a even just to kind of just do it by eye here. It really does kind of look something similar to this, and even if this isn't correct, then you could make the assumption that this could be some sort of like final leg here. Yeah, even if you kind of zoom out, there's still a couple of areas of consolidation that really kind of really kind of, I guess you could say, like stick out. None of these violate any sort of wave count rules or any of that stuff, but we have in any strong uptrend you get a lot of these like sell signals at some of these different tops here. But I guess you could say, long story short, this looks like a very very long term ending diagonal, and these typically happen when like a longer term trend is exhausted, or it's had a really really long run, and just some sort of regime change needs to happen. I mean, think about how much accumulation happens at the bottom of a range like this. You've got all these big dips and stuff like that get bought up quickly, but you don't have broad participation until you get a little bit further along. But even then, there's been a lot of chasing and been a lot of there really hasn't been a lot of opportunity to buy into these dips. I mean, if you look at these, they're very V-shaped, and if you look at something like this, where back in 2022, this is like a more I guess you could say like a proper correction. I know it sounds kind of weird when you say proper, but like traditionally, you'll see, or you would see something like this in like a normal functioning kind of market where you do have balance between buyers and sellers, and a lot of volume trade changing hands here. But now we've got this this AI catalyst there, and it will change the world. But sometimes you can get a little ahead of your skis here. So what I'm trying to look for is like any sort of I guess like medium term, longer term sort of pivot point now, because now that we've got this blow up top, like you have, for example, we were talking about this just before I started the recording. Like look at AMD. AMD is just going nuclear, and if you look at some of the earnings, they're not like spectacular. I mean, it moves the market a lot, right? But if you look at something like stocks, the entire semiconductor industry, up 5% today. I mean, that's hundreds of billions of dollars. So just in general, it's like, people don't really put these moves into context with actual like dollar amounts and how much these moves are actually worth on paper. So while people's 401ks and stuff are doing really, really well, the valuations of these companies have become disconnected really from reality. Like even though I say that, like, it doesn't necessarily mean that it's going to fall tomorrow. And I do think that the higher we go, the more problems we're going to have with a violent sort of correction here. And I think that the first step that we might get to, at least like the first target here, if we're talking from a bullish standpoint, I think we're going to see just one more final kind of push up here, and like for the S&P, I think probably like 74.50 is like a reasonable reasonable, quote unquote, like a reasonable sort of like stopping point, I guess you could say, at least for this kind of run. Now, longer term, we could see we could see something like just some sort of reversal that kind of revisits some of these other like tops that we've broken out of, that we've tested support and resistance and stuff on. I think a sell-off down to like 61.30, something like that, would be reasonable. It actually kind of looks pretty symmetrical there too, but this would be something where I think you could definitely make the argument that this would be like a buyable dip. So instead of just saying like, oh, massive correction coming, without any real justification, I feel like that's, it's like the broken clock where it's right twice a day, right? But I want to be right more than twice a day. So, so if you think about it, like, markets do correct. That's just part of the deal. But if you see something, this actually kind of looks a little bit more realistic, where you can get some sort of like longer term, like head and shoulders kind of test here of these trend lines, things like that. But that's just like one possibility or one scenario. I still think that there's just general weakness, but just like broader weakness. If you look at something like here we go. If you look at just general market breadth, it's the S&P itself has been super extended, while you also have participation declining significantly. I mean, certain industries more than others, of course. So you get something like energy has been sorry, I can't talk today. But like energy is a little bit lower than expected. The financials just keep plugging along because everybody's making money off trading revenue, or just in general. So like materials is kind of flat. Real estate is very high. I don't know why, because rates keep going up. But anyways, so there's a lot of just certain sectors aren't really performing very well, and you don't really see like for example, I want to see very high consumer discretionary spending if the economy is strong. But instead, we're seeing 31% of all the stocks trading above their 20-day average. So that just tells me that things are still relatively speculative here. But also you might see some sort of sector rotation here if we do have some sort of rollover here with the indexes. Now, I do think gravity will eventually take its course, but I don't want to be a party pooper here with the rally. So let's kind of take a look at what some of the resistance points might be. So really, I guess the bearish scenario is any selling whatsoever that lasts for longer than half a day. It's kind of weird to say that, but at this point, like with a blow up top, you really want to be aware that that these things don't really just stop and sputter out. They reverse violently, or you have some sort of news driven event, and you have a whole bunch of people that ask questions like, "Oh, what's going on?" You're like, "Oh, it must have been a news headline." No, not really. It's just technical levels have been hit. Algorithms are programmed to trade these things, and and there's profit taking. So sometimes when you get that that rubber band snap back. Here, and one other thing I'll add as context is some Bollinger Bands. I mean, it's definitely been hugging the top of this 2 standard deviation band for quite some time, and we haven't really had a whole lot of volatility. So like even this little correction that we had was kind of weak. So and it did kind of at least in hindsight here, it's like a 20-day moving average, but still it's extended, but that doesn't really mean that it's going to flip tomorrow. I think that there's other things at work here right now where I'm starting to see behavior where like the market opens and then there's a significant amount of 0 DTE options that are being used, I guess you could say weaponized against market makers. So the market makers, like if you have $50 billion worth of gamma that you're shorting, with 0 DTE, it doesn't really cost a whole lot to do that. I mean, yeah, it costs money to buy that, but really what you're doing is you're forcing the market makers to buy up the market and cover, and that is kind of a maneuver that I think is, I wouldn't say it hasn't been really common, because also too, like the market makers are, the client is also like the God, what am I trying to say? Sorry, I can't talk. But it's like, some of these banks and, these trading units that actually create these markets and make these markets, they can also be their own customers. So it's like, they could be trying to achieve a goal or something, like maybe they have maybe they have a whole ton of, long futures contracts that they have to keep buying as everybody keeps shorting on the way up and keep getting burned. So then they have to cover. So it's just kind of adding, fuel to this rally here. So, so realistically, to kind of keep it short here, I don't want to keep blathering on because we all kind of know what's going on. It's just up until further notice. I want to be clear about that. This is not saying it's going to reverse tomorrow, but I'm trying to call out some technical patterns here that we may have some limits. I think that we've got a pretty decent volume shelf up here, and it's very, very thin up here. It's been nothing but kind of buying and chasing and stuff like that. But if we do have, let's say we have, this ends up being, let's say we have a reversal tomorrow, something like that. You could see something sort of like this, where it just keeps climbing, and we end up hitting a crazy high or something like that. You still need to kind of like pull back and reload a little bit, if that makes sense. Here, let me zoom in a little bit, because this is still on the daily level. This is I would say like the primary bullish scenario here is you get an extension up here to about like 74.50. Since we ended up breaking 7,300 today, I think it's just bull until further notice. Even though I do see a pretty clear like 5-wave structure here, and definitely the wave 3 extended, but you can still see that even over time here, even an elevated RSI doesn't really matter. It's not really triggering a lot of selling. You're still getting some headline kind of probing up here with probing of buy support. But anyways, first scenario I would say, or the most likely scenario I think, is we maybe finish up the week here where we get this like final kind of high, and then maybe we get some news this weekend or something like that that's properly timed, to kick off that volatility. Because if you think about it, the last thing I'll say about the market makers and stuff is that yes, they do make the markets. However, they're making a killing on the spreads, in just trading in general. But when there's no volatility and there's just no volume, they're not making as much money. So it's almost like driving up the market or driving down the market doesn't really matter so much anymore. It's about how much volume is being traded. And ever since the advent of free trading and stuff like that kind of came about, I feel like the strategies have changed that have been in place for many, many, many years at these institutions, where now they're using like 0 DTE to try to drive the market higher just from mechanical buying and hedging and stuff like that, but also to for a couple of the other reasons we just talked about here. But yeah, to kind of sum up here, that's the first scenario. The second bullish scenario, I think, I'm not really going to cover Nasdaq. Nasdaq's like a beast of its own. It's just you just keep going and going and going. I do have to adjust some lines here. This is last week's. We never really got that wave 4 we were talking about. If anything, it was like a day. It just tells me that this rally is kind of manufactured for creating that FOMO. So even if I draw some trend lines here real quick, and then I go back to the S&P, you can still see it's getting really close to where you see some major trend line tops, and I do think that it will be. I do think that they will be respected. There is a case that it could Nasdaq could jump up to like 30,000, and I think that's probably where it's going. But I think the S&P would have to get to like 7,800 first in order for that to be a reality. But anyways, so with that being said, this is that first scenario. Second scenario is, let's say everybody's waiting to see the market hit that top. This is still a like descending diagonal. You can still have these 5 waves in here. Let me write this in. So in theory, this is kind of what this is supposed to what this is supposed to look like, at least from like a wave counting standpoint. And all the trading and stuff I've done over time here through my life, the wave counts and stuff I do think are reliable. Yes, they are subjective, and you can get your counts wrong, but Fibonacci, like extension levels and stuff, like they don't really lie. Like the math behind this and like the stats of how these assets and things are traded it's pretty I think it's very, very interesting. It's like there's a whole world of math behind the scenes that most people aren't really aware of. But so the secondary move here is something, oops. So this could be potentially the last kind of move, and this is really only possible if we do not make or if we do not hit or tap on this trend line here. And I'm kind of thinking, it might be realistic to see something like this where you get a pullback, but it's another V-shaped kind of dip, and then you get like one final sprint higher, and then you get some sort of calamity that happens that wipes out 20% of the stock market value in like 4 days. I know it sounds ridiculous at this time, but I've seen stuff like this happen where like in single stocks where you have like a run up in earnings, and then all of a sudden it just dumps right after earnings, like that kind of thing. So I think you also find now that there's a lot of stocks that are like there's nothing in between at the moment. It's either this chart is like super low or it's super high. So if you take that like the case of two worlds here, it's like you have your Roblox, which is still generating cash flow, a lot of it, but still gets punished with earnings. But then you get AMD, which they did well with earnings, but they didn't like smash it like Meta did or Microsoft, and those guys still like Microsoft shed 10%, not this past earnings, but on the last quarter, just for additional capital expenditures on AI. So like this is what is frustrating about the market, is that like you understand what the narrative is, but sometimes the narrative doesn't quite play well with what the balance sheet shows, and that's just another signal of excess and speculation and stuff. But shouldn't really have to care about that. It's just typical late stage bubble. So in my opinion here, this is probably the second most likely scenario. We've talked about this in past webinars where, like crashes are bad for business, but it's a lot of volume that changes hands. So maybe if you have engineered dips that are viable, you can make a lot of revenue from that. So if you're Goldman Sachs or Bank of America, those guys all posted gangbusters profits from their trading units and stuff. Not necessarily because of the trades and the funds that they managed. It's just the spreads and stuff making the markets. So in my I'd say it like this, in my professional opinion, I do think that if they're going to try to get more distribution, and get more market participants to to get some sort of exit liquidity, you're probably going to see more of this sort of ABC kind of continuation, and then potentially like a higher high, like let's say like 7,600, something like that, where you still get bulls that are buying and buying and buying and driving up the markets, but you also still have you also still have selling up here. But the only part of me that doesn't really trust this scenario as being like the first kind of scenario is that I think we probably would have seen a rejection already for like a something kind of like this, where I think we were talking about this last week, where we would potentially have like a more like a stronger dip, news headline driven, something like that, and then we would have some sort of continuation higher. But that's not really what we saw. So maybe this is just some post earnings kind of broth per se. But I still think that we might have I guess I don't know how to say it, like if we do have a pullback, it probably won't be anything that's like fast. It'll probably be like a multi-day kind of thing, kind of like this, where we had, every day was up 2%, down 2% the next, that kind of thing. Real crappy to trade. But you could also kind of see how it was accelerating here, and it kind of got saved by all the put buying that was happening, because we did go so high. In quarter one, I feel like it was kind of saved. Like we did have a lot of volume trading hands here, and I kind of thought that might be where you get a rollover. But you got a lot of put buying and stuff that forced the market makers to kind of save the market because they had to buy the dip. So, anyways, so I guess that's the secondary scenario here. We'll have to kind of see what happens here. As we've been chit-chatting through this, I've noticed a little bit of negative futures. Usually when you get to the end of a run, you start to see stuff like this happen, where if you get a little bit closer in, a little bit closer into the charts and stuff, you can see that okay, we had our trend day or whatever today, but maybe that's just kind of by design, because they want to hit a target and then maybe sell something tonight or tomorrow. You never know. But from a short perspective, I think we covered that right away at the beginning, but that's oops. Okay, so there we go. Yeah, I still think if we do see some sort of short, you're going to need to see like a continuation with high volume. So something like this is going to be a little weak and probably take a long time. But we're kind of getting to the point where the market is so high and this pattern is so reliable for like a reversal, that you'll probably see some sort of like it should be fast, like fast selling. So that's kind of it for now. Like I don't really want to cover more of a bear scenario until you actually get something to see. Okay, so that's kind of it for that. Any questions, comments, concerns before we move on to commodities? All right, I assume everything has been covered very well. That's great. All right. Okay, so let's look at the yield real quick. So the yield, I do think this is just like a bit of a stopping point here. I think this is in conjunction with oil taking the big dive today. I just think it's oil still has that inflationary pressure on it, and this is probably one of those opportunities here where the bond guys are trying to distribute a little bit more before the rates go up, and they have to absorb all that devaluation. All right, gold's a little weird right now. It's kind of right at that midpoint where you've got this bit of a stretch up here. It's not anything that's a surprise. I think I mentioned this the other day, like gold was kind of primed for a reversal here, but I still think it's kind of like a B wave for now. I don't think it really went very far. You can also see that the volume has been really, really muted. So this is, kind of feels like more of an engineered kind of pump here. But if we do see, another kind of sell on down to this like 4,400 level, then I think you could potentially see this like the kickstart of a like this final wave 5 here for metals, which is where I think you could probably get up to somewhere around like 6,000. And I think that oil is going to be the trigger. I think oil is really just the it's really just a catalyst here, where you have I think we were talking about this earlier today in chat, where we had a lot of people saying, or not a lot of people, like a lot of governments and things like that were kind of like the supply was running out from all these guys are trying to plug a hole in the dam here. But since the Iran conflict and stuff is going to keep kind of dragging out, I just think there's going to be more systemic risk priced into oil, and that's just going to continue to drive inflation. So with that being said, like I think gold is still kind of like gold and silver, so kind of like a safe haven trade. So yeah, I hope I'm not too late here. But yeah, take a long sort of gold trade here. I'm kind of waiting for this like 4,400 level, if not lower, maybe 4,270. Silver, silver's kind of got a bizarre chart as well, where it's kind of right at that range where you're getting kind of close, but it did kind of bounce off this 0.618 measurement here, and I think if it does end up pivoting here quickly, then you could potentially see like a way back to where it like actually broke out. So like this 56.7 or slightly lower than that. That would be a really good buy for SLV. Maybe some leaps calls or something like that. Oil actually got bought up very quickly. I kind of have a feeling that there's a lot of people that have long oil positions here, and this is kind of like institutions battling each other. But you've got some consolidation here. I think that you'll probably see another bit of a run up, but then another kind of test of this 50 daily moving average. Just from a pattern perspective, this really does look like a continuation, just in general. You've got a lot of this fluctuation here, a lot of this position adjustments, but also just people kind of trying to wait and see like what happens with the Iran situation. Like you hear one thing one day and then it's completely opposite the next, and then they're threatened to be destroyed into oblivion, and then 12 minutes later you get a tweet that says that, we've had very productive talks or whatever. I mean, it's really all BS. I hope you guys know that. So it's really just it's political theater at its finest. Caesar and the gang will be proud back in the Roman times. All right, so natural gas, I think, is really just kind of putzing around here, just kind of like oil at the moment. But I still think it's been consolidating long enough that you will see something happen with it. This is a pretty strong kind of flagpole, kind of pattern. Stocks, I'm only going to cover stocks for like half a second here. This is just wave after wave, higher and higher and higher. I don't think even the speculators know where it's going to stop. But 509, 510, whatever. I mean, you've got some selling here, but nothing with any sort of real volume. If it is going to hold its wave patterns and stuff like that, you might see something like something like a 528 or whatever, being like a final kind of sprint higher. But we just have to see, because I mean, semiconductors really are driving the entire industry at the moment. Sorry, not industry, all the markets. Bitcoin's getting really close to this 0.618 level. So this bull target too, I think it'll get hit probably by Friday. Then I do think you'll have it's kind of decision time for the crypto bulls or bears. I mean, look at the volume; it's just really falling off a cliff here. You've got a couple of bigger buys that try to get it over this kind of trend line here, but I think this probably will be like a false breakout. Like we didn't really have any sort of touch on this 200 daily moving average, and if you look at this, I mean, we're talking about math lining up really well. This is one of those. I guess you could say like oddly timed sort of mathematical convergences. I know that's a weird way to say it, but you get a tap on this, and then you could probably see a pretty strong rejection here. So that's that. I'm just going to touch on MSTR 1 second here. Looks like yesterday was a good time to get out of there. Just take a quick look at these awful earnings. Yeah, that's a nasty surprise, hey. So anyways, MSTR is a garbage company. I'm trying not to. I'm not going to add any more longs or shorts or anything like that. I just have a good to close stop order set, and then once that stop order's hit, then I'm going to stop covering MSTR. It's just too volatile. I I don't like the company. I don't like the owner. I just don't like it. So it's time to move on. There are cooler things that we could trade. All right, so back to it. Last two Nvidia. This one I think is just getting pumped because you know, we don't have anything earnings related coming up here. It's just something to keep keep the markets at these current crazy levels. Tesla is the one that I kind of think that we might have. Like I think we may have hit that low. I'm kind of waiting for like a bit of a pullback here. We've got some declining volume, but I do think that you'll probably see a little bit of a higher high. I would like to go long, but I kind of want to just wait a minute, just because everything's going nuts. It's just not a good time to add longs. I feel like I've been overly cautious, but if everybody knew that it was going to be a crazy bull market, then you would have had way more participation. But that's just not how these things work. So just trying to be careful, preservation of capital. Just don't short. That's good preservation of capital until you have very, very strong signals. Okay, so that's kind of it. Any questions? Cover everything? Anything else you wanted to cover? Okay, I will stop the recording then. Thank you guys for listening, and have a great night.
Thanks.